Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Tesla report for Friday, April 14th, 2023. Before I jump into all the charts, just want to encourage you to please click like if you would. It does help us out a great deal in being found on YouTube. You know, the number of likes relative to views, all that kind of stuff with those algorithms. Also, if you could become a wickedstocks.com subscriber to the Wicked Stocks YouTube channel. Sorry, Wicked Stocks YouTube channel. If you follow us, you'll be provided notification each and every time new content has been uploaded, which includes the daily Tesla and daily Apple report. So this picture, the weekly chart, that 229.39 long-term channel top still in reach over the weeks ahead. This thing is dropping at a pretty decent pace. The line study may actually meet trade as opposed to trade following up to the line study. That does happen. If we get caught into a long-term consolidated framework, this 229.39 will be in the 190s, 180s before we know it. But that's another story altogether. This area became a target actually several months ago when we closed above this mid-band structure, presently in the 140s. Now, we may fall back into the 140s perhaps over the next few weeks. That was indicated recently when we closed below this full channel bottom that we essentially tested on Thursday, today at 187.34. So the way this looks to me is we're still heavy, still in reach of 146.06 over the next few weeks, holding below 187.34. And if we rally today and close not only above 194.39, but also I've got a short-term channel top that I really want to see this market close above at 194.80. So I've got it at 194.80, but just know that it begins at 194.39. That is that long-term speed line that held the March low, and we closed below a little over a week ago. By one measure, we remain weak into May trade below the 194 handle resistance, and by the second measure was the settlement a couple of days ago below the 187.34 full channel bottom. So heavy below 187.34, anticipating the 146.06 downside 5/8 Fibonacci by the end of May or sooner. This 5/8 is based on the January low against the February high. Now, on the way down today, I have 176.11, nothing more than the low from Monday, Tuesday, Wednesday, Thursday. That's right. Monday's low, the weekly low, 176.11, can contain intraday weakness. It is in reach today below 187.34. So that is the day trade, heavy below 187.34. Selling pressures can build 176.11 in reach. If we break 176.11, we just might test 166.85 intraday. I don't show that. That's nothing more than a descending channel bottom. If you take these highs here, coming across these highs against this low at the same rate, that is 166.85. It's dropping at a pretty steep rate. It can certainly contain session weakness. So if we break 176.11 today, 166.85 is likely where we can place a daily low. And I will say that if we close below 166.85, we should, over the next day, 2 or 3, test this 156.35 level. Now, 156.35, as I said a couple days ago, having closed below the 187.34 channel bottom, this remains our 2 to 3 week objective. 146.06 in reach by the end of May. This is, you could call this a narrowing band of support. This is bottom picking territory. You could say all the way down into the lower 140s. I hate to throw all that at you though. I hate to tell you to buy 156.35 and keep buying all the way down to 140, 183. No, that's not what I'm going to do. What I am going to say, though, and have already said, is that 156.35 can certainly contain weekly selling pressures. Whether this is a move low or not is altogether open for debate. You know, once we test 156.35 and we turn back up, I can tell you right now, I'll cast a descending 1/3 speed line off this February high. If we close above it, we should then see a significant rally over the weeks to follow. But we could just as easily top out at the descending 1/3 speed line, continue south, violate 156.35, and then test the 140s. It is the 146.06 down to 141.83 area that is our big zone of support that can, if tested over the next 3 to 5 weeks, contain selling into the third quarter. And from there, we can turn up again and stabilize. And we'll just take it one day at a time from that point on. But bottom line, we are heavy once again. through next week and into May below 187.34. Now for the upside. If we push or open today above 187.34, the 194.80 level in reach. And that really begins at 194.39. So pushing through 187.34, the day trade shifts positive into the 194 handle, 194.39 to 194.80. Also able to contain buying through April. We could fall off from here. And bottom line is not unless we close above 194.80 do I see a pretty significant rally then playing out as we move into later April. This 218.27 former channel bottom then likely within a couple of weeks, and that is gradually converging with the 229.39 long-term channel top that I mentioned at the beginning that is right here. So if we close above 194.80 today, for instance, I think we're probably 2 to 3 weeks away from reaching this longer-term objective at 229.39, where we can top out through Q3, possibly into later year, and if settled above, would signal longer-term bullish continuation into later year. But until then, once again, we remain heavy today and through next week below 187.34, and if we rally today and close above that 194.80 level, which is right here, then it's just the opposite. And that's just the way I see it right now. I don't think there's really anything else to say. You know, I will sort of nuance this, that holding below 187.34, you can buy the 140 or 145 out of the money puts that don't expire for at least a month. And inversely, if we close today above 194.80, liquidate those puts, reach for the 220, 225 out of the money calls that don't expire for at least a month. That is the options play that I see. Anyway, that is all I have for Friday's Tesla report. Of course, I'll be back Sunday afternoon with Mondays. You have a great weekend.